So we're going to start the month of June today with the markets. We're going to have a very gentle way to start since the weekend is already here. So let's get Johnson Chukwu from Carry Asset Management, who is the Chief Executive Officer, to talk to us a little bit about his outlook for the new month, looking at the macroeconomic positions where we are at the moment. Good morning, Johnson. It's good to have you on the show.
Good morning, Bosin.
Yeah, it's nice. Quite a lot of not so palatable May markets. So do you think we have anything to show where the new month will take us?
Well, we have to look at the market in segments. If you look at the equities market, I think the equity market will remain relatively quiet in June, given the factor that influenced the drop, the bearish run we saw in May. On the fixed income market, I think activities will pick up there. A lot of investment will go there, particularly from local fund managers. The FX market will also see a lot of activity. We already see central bank intervening in the FX market to stabilize things. I think that will continue in the current months. So the three market segments of the money market in terms of the Naira market, the Treasury-based market, we should see an elevated level of activities. We see investors pushing money there. You saw the 560 billion trade that was done in the OMO market yesterday. And then we also saw in the FX market, I mean, you mentioned in your report the amount that was traded, about $560 million that was traded in the FMDQ yesterday as well. So we should see a lot of activity in the fixed income market, the forex market, but we should see a downbeat in the equities market.
If you look at where we are, look at the PMI that just came in this morning from the central bank and FBN Quest, showing that our manufacturing activity is slowing down. This is not a very good news to a situation where we find ourselves. This looks like the manufacturing sector is treading water. Do you think there's something there within the macroeconomic, broader political space that you think is getting investor sentiments deeper into sentiments territory?
Well, I think the major challenge that the manufacturing sector is facing is what the other sectors of the economy are facing, and that is high cost of funds and lack of, in fact, availability and cost of funds. If you look at what has happened, if you look at the first quarter GDP report, you saw even the agriculture sector growth slow down to 3%, though the manufacturing sector picked up. But the fact that we're beginning to see a PMI from the FMQ Quest report of less than 50, which means where the manufacturing is a contraction territory, is actually contracting. And that should be of great concern, because even if you look at the growth that we saw in the first quarter, it was very tepid, 1.95% growth in the first quarter, down from a 2.11% growth in the last quarter of last year. So the key thing is that we need to find ways of stimulating the real sector of the economy without necessarily triggering an uptick in demand for FX or necessarily pushing back inflation in the not territory. The challenge the real sector has, which is what is manifesting in the manufacturing sector, is that there is no availability of credit, and where it's available, it is quite expensive. And today, the banks are quite lukewarm when it comes to lending. And we just have to find ways of pushing credit to the real sector of the economy if we want the manufacturing sector to pick up. And that is where jobs are created.
We're interested in when the market goes in this nosedive, as it were, with a very strong headwind. So what would you, as an asset manager, as a stockbroker, financial advisor, what do you tell investors in particular, local investors who perhaps think, well, the mantra of the market is buy low, sell high, so stocks are low. Should I buy? Or should I sell?
What I'll tell my investors is to hold. If they are already in stock positions, they must be ready to wait out for the next 1 year. If they are not in stock positions and they want to buy, I will ask them to hold on and wait further. Simple reason that if you look at what is happening now, it actually happened, similar thing happened in 2014. The only difference is that the first quarter of 2014, by 31st of May 2014, we had a market appreciation of 0.35%. By end of May 2018, which is 4 years apart, a year preceding the election year, we had a market decline of 0.36. So it's in tandem with the political environment we are now. We're in a transition. Some of us actually felt that the activity we are seeing in the equities market will come later in the year, but it looks like the primaries of the Congress of the ruling party has now fast-tracked the risk inherent in an election year in Nigeria.
Well, where do you think there are buying opportunities in the markets as we speak? What sectors do you think the fundamentals are strong despite this weakening in the PMI that we started? It starts coming at least with the last one for the month of May we have before us.
Well, my first choice will always be consumer goods, and I always emphasize it. If you look at Nigeria's World Bank Confidence Index, the greatest strength we have in sectors of the market, where we score about 25 or thereabout. The reality is that the Nigerian market is huge, and it's basically a consumer market. So for investors, buying into consumer goods companies, you are not likely going to go wrong. Though the prices may correct further downwards, but ultimately you're going to see recovery as the economy bounces, as the political risk moderates. The next is the financial service sector. Yes, they've suffered a lot, but they are also the first sector that goes into a positive upswing when the economy goes into a positive drive. So those are the first sectors I will actually recommend anybody who wants to go in now to go in. But the best thing, my first advice is, if you're not reading in those stocks, you can wait for the next 1 month or 2 months and go in when the stock has bottomed out.
Finally, if you're making a prediction or doing a forecast and you're looking at the rest of the year, where do you see the second half?
Well, I think the second half is actually going to witness a further correction in the equities market. The year may end up with a negative performance in the equities market, but the recovery should come early next year after the election. I think for investors, the best thing to do is you need to underweight your portfolio in equities and overweight in fixed income instruments, which actually manifested. If you look at the 231-day treasury bills that were auctioned yesterday, you saw that up to 560 billion was put into that instrument, because investors are also looking at, look, in 231 days, we will almost be at the verge of an election period, and then the risk, you can dimension the risk. Today, it looks like we are in a politically fluid environment. The ruling party is going through some difficulties, and some people are beginning to predict that the party may unravel. And then the opposition party doesn't seem to be in a strong position as actually to contest for the most prized position in the country. So investors are wary of the political environment, and they are actually moving away from variable income instruments to more of fixed income instruments.
Let's leave it there for today. From Carrier Asset Management, the Chief Executive Officer. Do enjoy your weekend, Johnson Chukwu there, for you trying to get us into the new month. But of course, you may already know that the Nigerian stock market was the only one with a very nasty month of May. This is out from Bloomberg early today. The MSCI World year-to-date is just a paltry 0.5%. The MSCI Emerging Market year-to-date a negative 2.6%. Around the world, it was a very bloodletting for the month. We just finished the MSCI Frontier Markets and GCC, that's Frontier Markets globally, and the markets in the Middle East, so just 9.9%. But if you look at the African market, Nigeria is in the third worst position for the month of May. The Ghana market finished the month of May a negative 12.7%. Egypt at about a negative 9.1%. Nigeria will finish the month of May 7.6%. Namibia negative by 7.1%. And the BRVM, that's the Francophone 8 countries regional exchange sitting in Ivorian capital in Abidjan. That's the BRVM year-to-date a negative 11.6%. Month-to-date 7.0%. And even the North Africa major market, Morocco, is now trading water 6.3%. So the routing that you saw in Nigeria wasn't peculiar to this market is a little bit warming its way around the markets. It's a bit of what is also happening out there. Let's hold that conversation for next week when the show returns. But for now, let's take a quick break, a very quick 2 minutes.